Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, you know us by now. On Sunday, actually, Lanny published his watch list where he featured two Dividend Kings. Today, you're going to be watching my watch list for the beginning of March here. We're going to talk about 3 undervalued dividend stocks to buy coming your way.
Guys, you're here already. Like this video, subscribe to the channel if you haven't rocked with the Dividend Diplomats, guys. Again, we're generating thousands of views, but we need more thousands of subscribers. That's where you can help us. Bert's got 3 dividend growth stocks. Keyword on the growth, because a couple of these have increased dividends historically for over 10%. And the other one is in the ring in the semiconductor space. And we're not talking about Intel, brother.
No, we're not. And despite the fact that I stopped growing a long time ago, these stocks continue to grow your dividend. And that's what it's all about. Because right now, this market's interesting. The market continues to yin and yang back and forth. Some days are down, and then all of a sudden you walk away from your computer for 5 minutes, you come back and the market's flipped around and it's suddenly up 1.5%. And you're like, all right, lady, I'm done for the day. I'm not looking anymore.
Flip around and the taker comes up, grabs your throat, and just brings you down for one last choke slam to the mat.
Yeah, that's pretty much exactly what it's like. It's hard, but that's why we do the research ahead of time. That's why we produce these watch lists. That's why we have our screener, so that when the moment comes, the moment the market tells you to buy, you can buy that screaming undervalued dividend stock to buy. So I'm pumped up today to talk to you about 3 companies. I own all 3 of them. I started initiating a position in the 3rd company we're going to talk about, and I plan to keep growing that one pretty rapidly. The other 2 stocks I've been owning and buying over the last few months as well. So none of these should probably be a surprise to you. Well, maybe the 3rd one, but the first 2 definitely shouldn't.
Yeah, I mean, Bert's been stacking assets here, stacking cash, especially on the first 2 stocks that he'll dive into. You know, we've even been buying some and nibbling on the 2nd stock that we'll talk about. Don't own the 3rd stock nor the 1st. But hey, this is Bert's trifecta stock watch list right now in March 2023. Let's bring it.
Yeah, we're going to run them through our screener, which has 3 metrics to rip through them quickly. PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and number 4, that bonus yield. So, all right, everybody. Number 1 on this list. Let's talk semiconductors. Semiconductors. That's how you say it. I don't know what I was talking about right before. Been tweeting a lot about this company on our Twitter feed, so we'll put a link down there so you can just follow us on Twitter too if you don't. Number 1's Qualcomm, ticker symbol QCOM.
Fine. Qualcomm is back on Bert's dividend stock watch list.
Yeah, the price went down to the low 100s. It popped up to the mid 130s. I stopped buying it, and now it's in the low 120s. So that's where I'm going to take this opportunity to continue building my position in the company. And in March, I want to at least have $100 of forward dividend income from Qualcomm. That was kind of the goal I set for myself. It'd be even crazier if I was able to get up to at least 120, 130, where I can at least drip 1 share per year at this current price. That would be kind of a cool little benchmark to have here for Qualcomm.
Bert wants that drip, drip, drip. Let's get it going, Bert. Keep buying shares of this stock. How many current shares are you at?
We own 30.207, so we produce $90 in dividend income. It's easy to figure that one out because their annual dividend is $3 per share. So much like how we talked about J&J in our last video where we had your watch list, Lanny, Qualcomm's also going to be increasing their dividend here in April. So it'd be kind of cool to get an almost full position before they announce this dividend increase at that time.
The race is on for you, Bert. So they're traded at $123.60 here. You know, their earnings right now is looking like, based on the analyst expectations per Yahoo, $9.37 to get in that first metric here. Again, keep in mind the S&P 500 is about 20 to 22 times earnings. Qualcomm's at 13.19. Whoa.
Yeah, and the price has come down because some news with Apple. They're not going to be supplying chips for Apple into the future, but they're also figuring out other ways to grow their revenue too. There are plenty of other side businesses that are going to be there. I was reading some articles. They might
Mercari selling stuff online on Facebook.
Exactly. They're going to be the power behind. They're going to benefit from this OpenAI chat GBT boom. That's some of the stuff I was reading. So, hey, everyone's going to be benefiting from it, you know?
Taking a page out of Twitter's page, just trying to have a fire sale of all the furniture and equipment inside buildings.
Yeah. Just get rid of all the fixed assets. That's what Qualcomm's going to do here. So I mean, I'm going to use this chance to keep building the position. Like I said, a 13 PE ratio is great. Let's move into that second metric, the payout ratio. Annual dividends $3, payout ratio is 32%. So hey, even if there's a slight bump down in earnings, plenty of room to continue growing and increasing that dividend going forward.
Yeah, I mean, again, even if earnings was cut in half, you're only at 64% payout ratio. So very safe, and still have room to grow the dividend, which they have been doing now. To get into that third metric, for 19 years, which is how old Bert is. So for 19 years at an average rate of 5.64%.
I'll take it. Can't complain there. I'll take looking 19. Dividend increase has been moderate, I would say, at 5.94% for the last 5 years. Not the highest for the tech sector, not the lowest. So slow and steady there. They're on their way to becoming an aristocrat.
Yeah, steady. Again, you're getting a decent raise every year in high inflationary times and low inflationary times. But they've been pretty damn consistent, right, brother?
Yeah, that's right. And with the price coming down over 24% over the last 52 weeks, their yield is 2.43%. The reason why I laugh is because they're actually up year to date. They're up 15%, but they're down from where they were at the highest point so far in 2023.
Dang, 138 billion by market cap. Again, Qualcomm, beast in the industry. Again, there's a lot of fight going on right now in the space. But to summarize, a 13 PE, a 32% payout ratio, above 5%, almost 6% dividend growth rate for almost 20 years, at a yield of 2.4%. Bert's trying to really stack some assets here, and he's only a few short shares away from hitting $100 in forward passive income from Qualcomm.
That's right. Number 2 is Tyson, ticker symbol TSN. It's been something I've been scooping up for a while. I think, Lanny, even you are joining the Tyson party of adding some shares too. The meat giant. I mean, $60 per share. It is down 6.87% year to date, down 37% over the last 52 weeks. Companies just hit by inflation, rising costs, lowering demand for some of their products. Because the price for the consumer has gone up so much, people are just buying less meat. They're moving their food budget into other places because just the overall costs have jumped. So Tyson's facing some pressure today. There's no doubt about that.
Some of Tyson's brands, obviously Tyson Chicken, you guys know that one pretty well, but you got Jimmy Dean, Hillshire Farms, the Ballpark hot dogs. No offense to the other Sugar Dales out there, but Sara Lee. I'm just going down through a list really quick. And some pretty popular names here.
Did you see they just made an acquisition too? They're still acquiring. They just acquired a sausage maker. I can't remember the name of it, but they're still looking to grow. So, I mean, despite all this, they're continuing to expand their empire, which is great. So, and that's why when we run them through the stock screener here, I'm just going to keep building on my position. We currently own 65 shares of Tyson, $124 of annual dividend income. So there's still room to keep nibbling, adding 1 or 2 shares here or there every week, especially if the metrics continue to make sense, which we're about to show you.
Yeah. So to get into that price to earnings ratio, they're expecting $4.33 in earnings. That's similar to Qualcomm, a price to earnings ratio of only 13.7 right now at the time of this video, as of March 3rd stock price.
Yeah, and their payout ratio is 44% right now. So, I mean, that's good to see, especially given some of the pressures they're facing, some of the higher expenses and lower earnings in the short term. Their dividend is still plenty safe. It's in that perfect payout ratio range. So like we've been saying, if earnings are cut in half, it's a little higher than you'd want, but they're still, earnings cut in half, they're still covering their dividend. That's huge right now for Tyson.
Huge. I mean, they've been increasing dividends for 11 plus years at an average rate of 12.36%. This is the first of 2 double-digit consistent increasers here on today's video. Can't complain about that. I mean, almost halfway to being a dividend aristocrat.
Yeah. So, I mean, their yield now has jumped up to 3.24%. So it's great. 3.25, not much. And their market cap's 21 billion. So about the same size as Hormel, who we just featured again in that last video.
Guys, Tyson, 21 bill by market cap, again, down almost 40% on the last 52 weeks. Price to earnings just under 14, payout ratio over 44%, growing dividends for 11 plus years at 12% plus, with a dividend yield right now of almost 3.25.
Yeah, so let's move to number 3. This is the wild card, but this one's close to Lanny's heart for many reasons. Premier Financial Corp, ticker symbol PFC. Who the heck is Premier Financial Corp? They are an $8 billion bank headquartered in Ohio. They serve Michigan, Indiana, Pennsylvania, Ohio, West Virginia, and some gray hairs for some of the people here we're talking about. But that's a story for a different day. We love the banking sector for many reasons. And what jumps out to me about Premier right now, let's jump right into the valuation metrics, and then I'll talk a little bit more about why after. They're very low valued. We always use the price to book ratio for banks. We like a cheap bank from a price to book of 1 to 1.1 usually. They're 0.98. So their price is lower than their book value. It's way below. And that's one of the big things that jumped out to me for this bank right away.
Again, yeah, below 1 shows that they're obviously trading over, or trading under what their just equity is at this point, which is, great to see if you're looking to buy a bank. So always evaluate that.
Yeah.
And Bert, $2.91 in earnings right now. So what does that price to earnings look like based on the $24.56 close price?
8.44. So very cheap from the price to earnings, very cheap from the price to book, screaming undervaluation. Their annual dividend is $1.24. So their payout ratio is only 42.61%. So it's incredible for a bank right now.
Yeah, real solid guys. And, they've been growing dividends to get in that third metric for over a decade now. That must go back to the pre-merger as well.
Yes.
Average dividend growth rate is actually 18%, which is mind-boggling. Will they keep that up? Who knows? But again, a double-digit banger bank right here.
Yeah, and they just announced a 3% increase. So much like a lot of other companies, in the long run, they might return back to that, especially if the environment gets better. It's going to be a little more conservative going forward, but you would expect that with almost every bank. Here's the kicker, though. Their dividend yield is 5.05%. So
yeah, you keep in mind about the bank space right now, because interest income isn't going to quite jump up like their interest expenses as they're fighting for all of your dollars, because you're chasing those high yield savings accounts. They have to compete with that. So they're putting out a lot of CD rates that are, probably between 3.5% to 5% right now. So their interest expense is jumping quite a bit.
Yeah, that's what's jumping up. But if you looked at their earnings, they did achieve strong revenue growth, but you see that net income came down a little bit last year for that reason. The interest expense jumped up, but what was incredible was how much their loans grew still, how much their interest income still grew. But yeah, your trend, you spotted it right there. That interest expense jumped up, but guess what's going to happen when rates come down? It's going to drop down very fast. So you're going to have this golden period where interest income is going to be higher with a lower interest expense. That's going to be one thing you'll see until loans start refinancing at a lower rate.
For all those in the area, they have a 13-month 4% special. But no, you can buy treasuries cheaper.
Yeah. So to summarize them quickly, 844, payout ratio 42%, price to book is 0.98. I forgot that. 5-year dividend growth rate 18%, increase for 10 plus years, yields 5%. They're down 9% year to date as well.
Guys, there it is. Three stocks Bert's been buying pretty much the last couple of weeks.
I was just going to say, I'll make this simple. You usually ask me to rank them. I'm just going to tell you, I'm buying all 3 of them. That's just how I feel about this. So they're on my watch list, and I'm buying each one of these companies. I own 9.5 shares of Premier right now. I just started this position. I'd love to grow that one quickly. So we'll see. Maybe it's another one where I can merge some smaller positions into this one.
Guys, who here owns PFC? Let us know in the comments if you've been buying this, local community bank, that's spread throughout the states. 8 billion, not too small, but they're obviously not over 10 billion. Again, in the Qualcomm semiconductor space, let us know in the comments if you've been buying them or Tyson as well.
Yeah. And remember, subscribe to this channel if you haven't already. Like this video. And remember, if you're not with us, you're against us, everybody.
Guys, that was Bert, the Herd, and Lanny from the Dividend Diplomats. Over and out.